JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 12th of July 2021. So welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, let's jump into the chart. So the first one I want to pick up here is Nikkei 225, and we can see a beautiful, nice reversal here to the upside. And this is what I talked about last week, guys. Basically, I said that if this 200-day EMA continues to provide support, then yes, there is a possibility for this one to move higher. However, I would need to see it push at least back above the 28,118 territory right here in order to maybe get a little bit more comfortable with a higher move here. But as you can see, I mean, the move happened, yes, but not it didn't really go all the way here towards this little short-term downside line, taking it from the high of the 16th of February. So for now, I mean, we're currently stuck near the 100-day EMA together with the 21-day EMA, and in a way, I'm going to continue targeting the upside here, but only up until this downside line, because I want to see what's going to happen further if this downside line is going to act as a, or I should say, if it will provide another hold up again, and then of course we'll take it from there. For now, let's keep an eye on this area here. If we clear this 21-day EMA together with the 100-day EMA, then yes, we could see a bit of a higher move here, and more buyers maybe could drag this one all the way here towards this downside line. So let's keep an eye on that one. With the downside here, pretty straightforward. We need to stay with the 27,385 territory for now, because that's the lowest point of May. It's near the current lowest point of July. So basically, it just kind of proves that this is an important level to watch for now. So let's see how that's going to play out. Oh, let me just highlighted that territory, but not like this, but like this, guys. So yeah, it's at the moment it's a bit of an interesting one, I would say. It could present itself with nice opportunities here, but again, let's stick to the game plan, and for now, like I said, as long as we stay above this 28,118 territory, then yes, I'll continue targeting the upside. Shanghai Composite very quickly here, and we pushed also to the upside a little bit, not as much as Nikkei, of course, but nevertheless, still we remain in positive territory. Although Nikkei has already closed, I mean, Shanghai Composite still has around 55 minutes left of trading. So what I mentioned last week was that in order to consider maybe a bit of a larger, let's say, move higher within the little range here that we have, I would need to see a nice good daily candle kind of staying above this 3,558 territory right here. You can see that this morning we had a nice little pop here above it, but the bulls were not really strong enough to keep the price above it. However, as I said, we still have around 55 minutes left of trading, so let's see if that strength kind of comes back to the bulls. But if it doesn't, we're still gonna remain careful here and cautious, of course. And yep, if we clear this maybe tomorrow, then yes, we could see a move higher. For the downside, I need to see a drop below the lower side of the this little range here, and that lower side is roughly around the 3,503 territory. If we see the daily candle remaining below it, then yes, we'll go for, I would say, a bit of a further correction to the downside, because don't forget that we're still trading here above this upside support line taken from the low of the 9th of March. Now quickly jumping into the German index DAX, and look at this beautiful performance on Friday, and we've climbed back up here. We rebounded from this area, from the 15,456, and on Friday in the morning I was talking about this one, and I said that if we drop back below this 15,456, then yes, we'll start looking at the downside again. However, we didn't really get that, and instead, yep, we remained not only above this area, but also remained above remained above the 21-day EMA. Well, we climbed above it, and we stayed there. And looking at the cash index right now, let me just have a quick jump into that. You can see that the price is currently sitting at around 15,676 territory. So basically, just fractionally below Friday's close. But don't get me wrong, I mean, that doesn't mean that we could not really move higher here. What I'm going to keep an eye on for today is, of course, the high of last week, and that's roughly around the 15,700 mark, 701, something like that. So if we clear that level, then yes, I will aim for the upside, where we could then target the current all-time high near the 15,803 territory, and then of course the sky's the limit for that one if we get a break through that level, because that would place the index into an uncharted territory and would confirm a forthcoming higher high. So long story short, guys, for now with the German index, keep your eyes on the high of last week. If the daily candle fails to stay today above it, then well, maybe we could be moving sideways here for a while, because at the moment that's what we're seeing. We're kind of seeing a bit of a sideways activity. So however, like I said, if we start falling back below this 15,456 territory, then we will consider maybe a bit of a larger correction to the downside. Now jumping into not DXY, but the Dow Jones Industrial Average, and also fantastic performance on Friday here. We managed to clear the highest point of June here and managed to stay above it, and that level was approximately around the 34,850 zone. And yep, we are now kind of let's say on the cash index. Let me just double check that very quickly. Okay, so yeah, there we go. So on the cash index, we are actually seeing a bit of a retracement here right now. So we are seeing the price trading at around 34,815 mark. So below Friday's close, back below the highest point of June. In that case, what I would like to see here is, of course, another pop above the highest point of June, and then yep, we could go for that all-time high near the 35,091 territory. But if we stay below that highest point of June, guys, well, maybe we're not ready yet to go higher. However, we would not be kind of, let's say, getting comfortable with the downside as well, because we do have some obstacles here on the way lower, and that's why for now I would say that from the very short-term perspective, maybe keep your eyes on this little short-term tentative upside line taken from the low of the 18th of June, and at the same time here, for example, if we do see a reversal and the break of this upside line, then of course the price would be placed back below the 21-day EMA, and then yes, of course, ideally I would prefer to see maybe a drop below this 34,145 territory, which is the low of last week. But again, let's see how this is going to play out today in relation to this highest point of June, and yeah, if it continues to hold, we might see a bit of maybe a retracement here. However, I'm still leaning a little bit more to the upside overall. DXY. DXY here, yep, we saw it drift lower. However, with this one, it's a little bit tricky. Overall, it remains above all of its EMA, so that could be seen as a positive. On the other hand, we are still kind of struggling with this downside line here, taken from the high of the 25th of September. So what I'm going to do here is probably I'm going to play the waiting game, because in order to go for the upside, I would like to see maybe the daily candle staying, breaking and staying above this 92.74 territory. But for the downside, well, I would like to see a drop somewhere below this 92 zone right here, marked by the low of the 6th of July, and that, if I'm not mistaken, that's also actually the lowest, the current lowest point of July. So if we clear that and we drop below the 200-day EMA together with the 21-day EMA right here, then basically, yep, this could lead to a bit of a larger correction here, maybe to the downside, because don't forget that we're also still trading above this upside line taken from the low, the 25th of May. Now jumping into gold very quickly, and yep, gold here you can see that is struggling with this little short-term, or actually sorry, not short-term, but more of a medium-term downside resistance line taken from the high of the 7th of August of last year. Also, it is struggling with these EMAs here. So in other words, we are seeing kind of strong resistance at the moment. So in a way, if you want to be a little bit more on the cautious side, because this is what I talked about last week, guys. I mean, I talked about this scenario where we could see maybe a bit of a drift lower here if all this area continues to provide resistance. However, if you want to be maybe a little bit on the careful side and the cautious side, then you could keep an eye maybe on this 1794-95 territory, somewhere around here. A nice good drop below this may open the door towards a bit of a move lower here, and then of course, yes, we could start aiming for the lowest point of June near the 1750 territory, approximately around there, or maybe we could aim for this this upside, long-term upside support line, because don't forget that overall this is how the picture looks. So we're kind of stuck in between the lines on the bigger picture, yes, and yep, we could then aim for this upside support line taken from the low, the 20th of May of 2019, guys. Now jumping into silver. Silver is also looking a little bit on the weaker side. However, as I've mentioned to you, I'll stick to the same plan, by the way, because I've mentioned last week that in order to consider maybe a move lower, I would need to see a drop below this 25,000s and 25.71 territory, approximately around here, and that's the low of the 29th of April. We saw recently a few overshoots here, but with the daily candle, as you can see, was not able to remain below that area. So I would like to see that, like I said, eventually that happening, and if it does, then of course keep your eyes on this 200-day EMA, but if that gets cleared, then lower levels could be met. However, I'm not going to drag this one way too much here to the downside. Initially, I'm just going to target this little territory right here near the 24.69 level, marked by the low of the 13th of April. Jumping into WTI oil, guys, and here we have an interesting situation. We saw a recovery at the end of last week here, because in the beginning of last week we saw a huge decline and drifted nicely to the downside here, as you can see. But yeah, for now, guys, I mean, looking at this picture, we need to be careful, because we are testing this this upside support line taken from the low of the 27th of May from underneath, and it's currently kind of providing a bit of a resistance, I would say. So if you want to get a little bit more comfortable with higher levels on this one, then basically wait for at least the daily candle to push back above this upside line and stay above it, and if we do that, then yep, there is a greater chance for this commodity to drift higher. However, at the moment, guys, like I said, if by any chance the upside line continues to provide resistance, because we're testing it from underneath right now, then yes, we could see maybe a bit of a decline. However, let me just probably take a bit of a more cautious approach here, and basically if we do drop below the 72.68 territory right here, then yep, we'll get a little bit more comfortable with lower levels, and we could then target target the low, for example, the low of last week near the 70.79 zone, or we could go even further south. At the same time, by the way, if we drop below the 72.68 territory, then yep, we would be placed back below the 21-day EMA, and potentially that could attract a few more sellers. Now, jumping into Ripple very quickly, Ripple here is stuck, I would say, although it is trading below this downside resistance line taken from the high of the 14th of April. It's trading below all of its EMAs, but it's struggling to get closer to the lowest point of June near the 0.5125 territory. So, of course, we could start trying to draw some downside lines here as well from the more of a short-term perspective, and if we draw something like this, then you'll see that we have broken the downside line. So however, this downside line is a little bit on the tentative side, so that's why I don't really focus on this too much. Probably what could work right now is to keep an eye on some of these support and resistance levels. So for the upside, what I would like to see here is maybe a push above this this 0.7339 territory. That's marked by the high of the 29th of June, and yeah, this would maybe confirm a forthcoming higher high, and potentially could lead to some higher levels here. But don't forget that we would class this move higher only as a temporary correction, because overall we're still trading below this downside line right here. Now jumping into a few pairs here, and yep, AUD NZD. So I've looked at this one previously, but just removed all the lines just to have a fresh look, because after we reversed here to the upside on well, I would say at the end of May, you can see that we had a beautiful, nice rally here. We climbed higher. We found resistance somewhere around here, I think. Let me just double check. Yep, we found resistance near the 1.0813 zone, and then yep, we started drifting back down. And we fell back below the all of the EMAs here. However, at the moment, looking at this picture, to be honest, we're not going to really put much emphasis on these EMAs, because we're kind of oscillating around those right now. So what I'm going to look at here is from the kind of near-term perspective. I'm going to keep an eye on this downside line, for example, for now. This downside line is taken from the high of the 18th of June, and yeah, if we clear that, if we break that, and we then climb above all of the EMAs, then yes, we'll go for some higher levels, especially if we could also move above this barrier somewhere around here, this 1.0728 territory. So and then yeah, we'll go for maybe for the upside. For the downside, well, I would need to see a drop, at least first of all, a drop below the lowest point of last week near the 1.0658 territory, and yep, that a break below that level would confirm a forthcoming lower low, and potentially we could reach this lowest point of May then near the 1.06 territory, and then of course we'll take it from there. But at the moment, if we just sum up everything here, I would say that we are trading below all of the EMAs here on the daily chart. We are trading below this this downside resistance line, so in a way there are indications that a decline could be possible here. However, for me to get comfortable with that idea, I would need to see a drop below this 1.0658. But given the fact that we are very close to this downside line right now, let's see what's going to happen with it. If it breaks and we see the daily candle then staying somewhere above this 1.0728 territory, then, well, then we could maybe aim for slightly higher levels. Now jumping into USD JPY, and this one's quite interesting as well, because we continue to trade below this upside line taken from the low taken from the low the 6th of January. So what I said to you before, that if we find support somewhere near this 109.72 territory, we might see a little rebound. We got that. And if this area right here near the 21-day EMA, near the upside line, if that area provides resistance, then yes, another slide here could be possible. Another move lower, yep, could be possible. However, at the moment, guys, I mean, I would say be very careful here. It is a tricky moment right now in the market. So let's see if, like I said, if this area continues to provide resistance, and if it does, another slide could be possible. However, if the pair climbs back above this upside line, back above the 111 territory, somewhere around here, then, well, we could start examining the upside again. Quick update on USD CHF. Drifted lower, and we fell, or should I say, we're now kind of trading again slightly below this 0.9142, 43 territory right here. That's the low of the 25th of June. Also, we are breaking the 200-day EMA right now. Again, don't get me wrong, I mean, although there are indications that a further decline right now could be possible, I would still actually would like to wait right now just to see where this is gonna end today. If it stays below this territory here, somewhere below this hurdle, I mean the 0.9143, then we could maybe go for a bit of a retracement here to the downside. And initially I'm going to aim only for this 0.9052 territory, and then we'll take it from there, guys. For the upside, what I need here to see is, well, at least a push above the current highest point of July. That would be kind of probably ideal, I would say, just to be a little bit more on the safe side, of course, because if we clear that level, this will confirm a forthcoming higher high, and potentially more buyers could join in. So that's why the 0.9275 territory is the one to watch for the upside. US dollar against the Turkish lira, and yep, guys, this is the one that I talked about last week, and as you can see, we are kind of still coiling up here a little bit. So I would say let's wait and see, guys, in this one, because again, whenever we get into situations like this, it's always better to wait, not to try to predict something here. Wait for that breakout, and then we can consider the next short-term directional move. At the moment, I would say just it's a very interesting pair right now to continue observing, and yep, let's see which way that's gonna break out. GBP CAD, now something that I talked about last week as well, and what I said, that if we see the daily candle moving here and staying above this 1.7260 territory, then, well, I mean, this could open the door towards higher levels, and we could see this pair climbing further north, and initially we'll target the 1.7362 territory right here, marked by the high of the 26th of April. But if that gets cleared, if that is just seen as a temporary obstacle on the way higher, then my next target is the 1.7458 zone. I'm not aiming for the highest point of April yet. I'm going to aim for this high of the 5th of April and the inside swing low of the 20th of April. And yep, like I said, that's the area near the 1.7458 zone. So let's see how that's going to play out. For the downside on this one, well, to be honest, I mean, for this one, in order for me to, let's say, consider maybe lower levels, maybe a drop somewhere below this 1.7193 territory would be needed, and that's the inside swing high of the 30th of June, and potentially lower levels could be met here. Euro against the against JPY, so you mean, I mean the Japanese yen. So last week I also mentioned this one, and I said that first of all, we are trading below some of the short-term tentative downside lines. As you can see here, we're also trading below the 21-day and the 100-day EMA. However, what I've mentioned last week as well was that, in a way, if this area continues to provide support right here, this 130.05 territory, if it continues to provide support, then yep, we might see maybe a bit of a rebound and push higher. However, if we do see something like that, then be wary that maybe, just maybe, we could be forming here a possible descending triangle, which of course, according to all the TA rules, tends to break to the downside. So let's be careful with that. And for if you want to aim for lower levels, probably the suggestion here is to wait for at least a drop below the 130.05 territory. But of course, as you can see here, when last week we had a drop below this hurdle, next day it kind of reversed back down, so kind of do not exclude such possibilities as well. So even if we see a nice good strong move below this, then of course keep your eyes on the next day. Maybe we'll get a nice little retracement back up here, and but then of course we'll just have to go from there. But at the moment, guys, long story short, let's see if this is going to end up being a descending triangle. And finally, EURUSD. So this one is an interesting one as well. We found support last week near the 1.1794 territory, as you can see here. Or actually, it was a little bit lower. Let me just double check that. Okay, so it was somewhere around here, actually 1.1780 zone. So that's, yep, that's probably the level to watch. There we go. And that's the high of the 1st of April, guys. So the high of the 1st of April did provide a good hold up. It did act as a good area of support, and as you can see, we climbed back up. We climbed back above the 1.1847 territory, and now let's see if we can actually move a little bit higher again. However, if you want to consider those slightly higher levels, then certainly wait for a push above this 1.1878 territory right here, and then of course, yeah, we'll take it from there because if we do climb above it, this could open the door towards higher levels. But don't forget that we have this this kind of downside line, which also is the lower side of the previous falling channel. So I'm just keeping this one for now, because if it somehow respects that line, then of course this is where it's going to be very interesting. But if it doesn't, then I'll get rid of it. Don't get me wrong, I mean, I'll remove it and I'll stick to something else here. But at the moment, just out of interest, because this area here also kind of is near the 21-day and the 200-day EMAs, which also could provide resistance. So basically, in other words, all this area right here could do its job and could provide a holdup. However, like I said, I will consider a move towards that area only if we get a nice, good, strong move above this 1.1878 zone. For now, I will say let's be careful here. And for the downside, if we suddenly drop below this 1.1836 territory, then yes, we could aim for that 1.1780 zone again. So guys, that's it for the session. I hope you found it useful, and thank you very much for joining in and watching this one till the end. I really appreciate your views, your likes, your comments, guys. I really do. So yeah, thank you very much. If you want to catch me tomorrow morning, as always, at my traders Espresso, 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe, guys, and I'll see you later. Thank you very much, and bye-bye.